Hey folks, and welcome to the Pipnotic Symposium on the 17th of July 2024. My apologies for not getting more of these out. We've been traveling a little bit, so I'm not at my computer so much these days. But that doesn't mean I don't want to be. So let's have a look at some charts and see some of the stuff that we were talking about a while back. And so we had some, let me close this. So we had some zones marked off on the Euro USD. This is the one I think here, and so this is long come and gone. We saw a lovely reaction just here, and then prices on the second attempt just cut through. But notice also when you have a zone like this, first of all, on the first test, I mean technically speaking, the liquidity in that zone has been removed or depleted, and sometimes even when the edge of a zone is tested, so if we have a zone like the one we have, even when prices come down just to the edge of a zone, sometimes that is enough to deplete the liquidity in that area, and that is because others are also watching the zone. And when prices come down, and if there's a substantial reaction, depending on where prices go, if prices do manage to move to the opposing side of the market, which they did here, well, then prices will typically seek liquidity lower. Okay, and so I think a lot of the orders that were sitting in here were removed, some of which were taken, absorbed here on the first test. But after that, I think a lot of the speculation was that prices would seek to go lower because we managed to drive prices to these new highs that were slightly beyond these sell zone levels. And so this explains clearly why, especially when you have a move like this, prices race down. But notice, where did prices go to? Well, prices went to the buy zone. So we went right to the buy zone from here to here, right to it, and then we went all the way back to this little price nodule here, which I think is fascinating. Okay, so once that zone is gone, what happens? Well, then prices can easily gravitate towards an area that you would expect prices to gravitate to. And if you look at this little price nodule, let's zoom in just a little bit, you can see pretty clearly here that we have a pretty complex data structure here. But the release candle is this candle just here. Let me use a different tool. Is this one just here? But notice also that we have something in the candle prior, and we have a very, very clear rejection pattern. So if we consider 1, 2, oh, it wasn't pretty, 3, those 3 candles. So prices, this is candle 1, prices went up like this, and then they went down. And then candle 2, prices went up, they went a little bit lower, and then they closed higher, almost at the open of this one. And then on this candle, candle 3, prices opened, they went down to the open of the previous candle, which is around here, and then they closed above the open. So this candle just here, sorry, this illustration here very clearly resembles the 3 candle structure that we can see down here. When you see something like this, especially candle number 3, I mean, you can expect something volatile to happen after. And notice as well that we were quite low, that we were reacting. You can see that the edge of that red box there. We're reacting at the upper edge of an area of demand, likely a buy zone. We formed the child, prices left. Sorry, we formed the parent, prices left. We moved sideways. We poked into the parent, and then we snapped higher, and then prices left. Okay, this is just a really, really clear indication that prices are going to move higher like that. But notice now, we had this one here, parent, child, child. Actually, we have a two children structure here. Prices came back. We tested the upper edge. We went down to the bottom, to the buy zone here, and then prices went back to the buy zone here, almost. Okay, we went actually to the open of this candle here. Okay, you could even say, if we look at this here, this is kind of where the slingshot was pulled back to prior to prices leaving. We went here, we accumulated here, so we were just filling orders. Oops, just for a little while, and then prices gapped higher here. Okay, we stabilized, and then we started our trip north. This is very, very beautiful and quite clear. Okay, and so I mean, once this zone was removed, then it's time to find the area that consumed it, and you can see that just here. Okay, this is the zone that consumed it. Okay, prices came down to, they came up rather to here. We tested it. They fed back down into the kind of the origin of this volume, and this is where they left from. And you can see by the way that prices departed from this area of demand that we would potentially see some pretty volatile expansion just here. And you can see how prices gapped higher. We have a big wick, which is showing us something similar to what we saw here. And what happens typically after that? Well, then you see expansion. Prices begin to expand, and so the beginning of this bull cycle started. Okay, and now prices are expanding, and now they're kind of stabilizing, still looking to move a little higher. But if you look at where we are now on the bigger picture, notice that we have a sell zone here. What is that? The 1.1, and we're racing towards that. Okay, and so I'm expecting prices to give us a small reaction there. Also note that just here we have a 4-hour area of supply just here, not yet tested. This is kind of where prices gap down to. The slingshot was pulled back, and then we cut lower. We moved down to here, and so this is a very price sensitive area just here, where we can see prices currently are racing towards. So this would be a very interesting short scenario. Yeah, we'll see what the American dollar does, but there's been a lot of volatility, I suppose, in the news in the US because of this assassination attempt and whatnot, and so there's a lot going on in America. We have elections coming up. America is actually struggling, I'd say, for the time being. We have a lot of, then again, everyone's struggling, it seems, but America has a lot of internal political struggles. You have these parties who are almost literally willing to kill each other, and you have celebrities who were very outspoken about the fact that Donald Trump did not get hit, and they wished he would have been hit. I mean, this is very primitive language, and this is stuff that kind of gets to the headlines and makes people emotional, and then they kind of act accordingly, especially if they're interacting with the markets. And so you can expect this this really volatile behavior. I know. So that's for the Euro American dollar. But for me, I'm going to wait for prices to come up here, and I'd be quite happy if prices manage to move back down a little lower. Then you would need to find a clear place where prices broke away from. We had here lots of testing. Prices finally moved away from, and we kind of came from kind of something in here. So I'm guessing there's probably something in here. We probably would not get past this, but now prices are still wriggling north. We have something in here as well, which could be quite interesting, but there's nothing to do here for the time being. But I'm guessing that prices are going to continue to race north, poke into some liquidity, and then begin to break down and dip lower. We go to the pound American dollar. Let's have a look on the bigger time frames where we are. Yeah, so you can see here, I mean, American dollar weakness, American dollar weakness, American dollar weakness, and so the only reasonable thing to do would be to buy currencies relative to the American dollar. And if we look here on the weekly chart for the pound American dollar, we've seen very, very bullish prices here, and I actually quite like this here, how we had this kind of zone just here, these historical rejections, move up, away, move up, away, up, away, and now we managed to hold above those price points, and our attention is brought pretty quickly to something down here. We've got this here. Okay, so something around here I think would be kind of interesting. This is also roughly where we had kind of prices flipped from the resistance to the support. So I'm thinking if prices do manage to move back down into here, which they will eventually, I think this would be make for a pretty interesting buy scenario. Also because we are on the bigger time frames, we're seeing prices just continue to move higher. So we've got this trend line, we've got this accelerated trend line. So prices just looking to move higher. A guess to where they'll probably go is somewhere where we historically had troubles moving through. We had here, okay, tested, and now we're finally gone. So I'm guessing that we'll probably come into around here. okay, which is the sell zone is actually at this area of supply. Okay, we also have something up in here, and so I'm thinking somewhere, let me actually put a box on it so we can come back and look at it later. We'll put it here. This is where we currently are, and then if we go down to an hourly chart and have a wee scroll, we can see that that's not where we want to be. We want to be here. This is where we had the cutaway. So this would be probably an interesting spot, or a likely place for prices to have a bit of a reaction that's beyond the sell zone just here. Okay, we had a zone here, tested, consumed by this, prices moved away, we poked back up into the zone, and then we left. We went very, very far. Okay, so when prices came here last time, we had a very big drop in price. Okay, so I'm thinking that somewhere around here would be a pretty reasonable spot to begin to scale into a maybe a shorter term short position from around here. Okay, the American dollar. So mean reversion algos are going to have a tough time with this kind of a landscape because prices in some situations they don't stop, they just keep going. And so mean reversion algos are going to need a way to get out. Observe the fact that we are seeing expanding prices because of volatility, and stand on the sidelines. Okay, and so we have this. This was a zone that we drew on the chart a long time ago. This one just here. Okay, prices came down to that zone, which is also a weekly zone, as you can see. And then we tested, and then we moved away. So we had a lot of respect for that zone, and the reason this zone is interesting to us was because of this. But we spoke about this is just a beautiful resistance, and then prices accumulating below and then snapping beyond and then racing higher. Okay, that's telling us that there's a real keen interest on buying here, and this is a beautiful carry trade as well, because of that, because of the swap. The interest rate differentials between the American dollar and the Japanese yen. Prices came down to that zone, and then we moved high. Very, very beautiful trade scenario there. And now prices are breaking down. You can see this daily trend line is breaking down. So what's going to happen? Well, there's a lot of volatility in America for the time being, but I'm guessing, let's just put on one of these rectangles. I need to know where this went to. Yeah, notice how this is quite funny. We poked up here, we came up here, and this is exactly where prices stand on. So there's something here. Okay, so we move this along. This is where we had respect, and this is where we saw the respect for that level disappear. So somewhere in here. Okay, so prices will likely move back up here, depending how low they go. If they manage to move all the way back down and load the boat, so in other words, dip into the bottom of the book. We have liquidity here. We're thick on both ends, thin in the middle. Okay, so we have the bids down here and the offers up here. Obviously, if we manage to get down here, well, then that could create an imbalance in the supply and demand and fuel an accelerated move higher, depending on the continued weakness or strength of the American dollar. Okay, but this could be an interesting zone to watch, somewhere in here, between the 160 and maybe the 161. But I'll leave it on, and we'll come back to that and see what we can see if that plays out nicely. But for the time being, we have a lot of inefficiency above price, and so I'm expecting that prices will probably come down to some kind of a price zone like this one here. I like the 152, and then snap back very quickly in an attempt to rebalance these price inefficiencies. The Australian dollar versus the American dollar. Okay, so we had this. Let me go to the daily chart. So we had these zones marked off. We had this daily zone. Prices kind of sat on that zone for a long time, and then it managed to move through it and move back up into these small 4-hour zones. Okay, on the first one, prices went right to the upper edge, and this is where we saw a reaction. I think maybe we got pretty close to the 6,800 area before prices managed to break down. But again, we're seeing bullish move on the Aussie dollar, American dollar, because of the American dollar weakness. Because if we have a look at that, and this zone is gone, this daily zone, so we can remove that. And if we look at an area where prices will likely gravitate to, we want to find those zones where we can see, let me get rid of this, where we can see prices historically being respected and then being removed. So if we put this on the line chart, then you can kind of position this to a spot where you can see these zones playing out the closes. And you can see just around here, this seems like a pretty interesting spot, or around here, maybe around here. So this could be a good spot for that. So if we put a box on here, around there, I think that could end up being a pretty reasonable zone for future price. Yeah, so it kind of puts us back where we had that box before, just around here. So I think this could probably end up being a pretty nice price sensitive zone. Also, in the face of the American dollar weakness, rebalancing this price inefficiency, the moved above these highs, anything moving back down to the 60, 66, 80-ish area, I think would be a pretty interesting scenario there. Okay, we're going on now, already 15 minutes. So let's have a look at some silver. Yeah, so we had this daily zone on that's actually been playing out for quite some time. You can see that when prices left, let's go to the daily chart. Okay, so you can see that we had this zone here, prices popped to higher, and then we actually had a pretty difficult time moving below that. We've had several tests, 1, 2, 3, 4 tests, and prices are still kind of ranging above that zone just there. Well, this is pretty messy, but we have this 4-hour zone, which I really like. We have this one here, inefficiency. Let's move down a little bit so we can see. So we had this zone here that we marked off. Okay, prices rallied and accumulated just below it, and now they move through it. So we can take this and we can remove it, and then we can focus on the zone that is responsible for taking it out. And we had something here which was tested, prices rallied, accumulated, and then they popped through, slingshot, and then we left. So let me remove these. There's quite a lot of zones there. Right, so this would be a pretty reasonable spot, I think, just here. You go to the daily chart, probably see it way clearer. Yes, this looks very nice on the daily chart right there. I like that very much. So I'd be very comfortable buying there. Okay, right there, inefficiency. This is kind of the origin of the move that moved through this little price nodule, accumulated, caused price to move above this little one here. Prices came down, we moved into it. We had a beautiful reaction. We moved through it. And now we're kind of stabilizing. You can see that we are kind of beginning to kind of form this base. Let's see what happens, but I think I would likely wait until prices move down to at least here before I got in around the 2750 area. I think that would be a beautiful trade, and not such a bad swap, so that wouldn't hurt too much. Brent, we spoke about oil kind of moving lower based on the futures interest. So we had this 4-hour zone marked off. We've managed to come to it one time, 2 times, and now we managed to move away. And we saw a lot of selling pressure, and you could see this clearly in the via the Compass platform. The futures market was telling us pretty clearly that we were going to see a sell-off in oil. If we just actually bring that up, if I have a look at WTI, West Texas Physical, yeah, you can see that. I mean, we were seeing like a continued. Actually, okay, before we do anything, let's see longer term. These zones where we've been. Okay, I don't remember if we mentioned this or not last time, but we are moving down into like pretty negative territory. And the last time price was here, the prices were here. We move away pretty quickly, as you can see. Went through, and now we're kind of getting close to that there. and so we can maybe expect prices to maybe move away from this zone here. If we have a look at see who is doing this, so we have here, let's have a look. So we've got about 275, and we have 325 on the short side. This is a commercials, and these guys are mirror images, the commercials and the total reportable. And so I'm thinking that it's the commercials that are causing, the commercial shorts that are causing the downward pressure on this. Okay, so it's really important, because a lot of people think that it's the non-commercials only who are driving price. That's not always the case. You need to be able to assess who is doing the heaviest buying or the heaviest selling in the group in order to assess who's driving the price of the asset. And in this case, it's the commercial short selling, profit taking, that are causing the price of oil to continue to move lower. Okay, so knowing that, you go to the commercials and then you have a look at the data there and you see what's going on, and you can see that they are slowly continuing to expand. Only just, let's just see here, 939, 915, so they continue to expand negative, and they're just only slightly expanding their long positioning in crude oil. Yeah, so I think we're going to see a continued move lower for oil. You can see this huge dump last week relative to the previous week. I mean, that's a huge shift there, and that is because of the commercials expanding their short positioning. So if we go back to the charts, yeah, I mean, continuing to sell. Also, the swaps are in line with that, so just finding some nice zones wish to sell. And so what we would do is we would find the area of demand. First, we got to do our work. We had this one, tested, removed. Where did prices go to? Well, they went to around here. So let's just mark off this zone, because this is where prices tested. Came tested, and now prices cut through. What area was responsible for that? Well, it's something here. Okay, so we got something around here. I think that would make for a pretty interesting short scenario. Go to the hourly chart to refine that. Yeah, I think we could find something in here. Here's the cutaway right here. So you'd want to be in around here, and you want like pretty good stop size there for that. I think I'd be pretty happy doing something like that. About the 84. Roughly the 84 stops at maybe the 85, and continue to follow that down as we rebalance this inefficiency here. Also because, I mean, we had this here. Okay, so we had this zone, tested, removed. The origin of the move that did it is here. We tested it, inefficiency, inefficient low, and so I think prices are going to continue to do that until we get to the base. And then we'll figure out what happens, and we can see what the futures contracts say about oil. Okay, good. Well, that was 23 minutes. I'm going to stop for now, but if you have any questions about this video, any comments, whatever, let me know. And once again, thanks for watching.